What's going on, guys? It's Monday, 10 a.m. We got a new integration we're doing today on the Smart Helping live financial modeling stream, and it's going to be a car wash model. This is, if you look on the site, the third most popular startup model. We did the SaaS integration, we've done the equipment rental, we did the web app traffic conversion based SaaS model, and then now we're doing car wash. And then next up will be product as a service, freemium, mobile app, professional services, and then down from there. Um, I'm doing these based on popularity of sales. So here we go. Um, one quick thing I'm going to do to make, because I'm trying to make these integrations faster and smoother and make my integration three-statement model template that I'm using for all these very easy to do the same thing with, because I'm using this to do these. So one thing we're going to do is update the naming. Instead of writing out the full name of income statement, balance sheet, cash flow statement, I'm going to do for income statement, it's going to be IS dash monthly. And again, it'll work as long as there's a space in each of the titles of the tabs. It'll convert easy. ISA, balance sheet's going to be BS monthly. This is BS annual. And this just makes it easier to navigate and use when you're trying to get all the references in and just check everything. The rest of these are fine. Um, let's do a quick sound check. Also, don't forget to subscribe, like the video. Thank you to the free or the paid members as well for supporting the live stream. Jeffrey, Troy, PJ 5000, and Human AI. Much appreciated. All right, sound check real quick and video check. Make sure I'm heard and seen. Okay, that sounds good. Oh, wait, was a visual coming through? Yeah, okay. So hopefully everyone's having a great Monday. It's snowing a lot here. Um, but we're pushing through. So on the car wash model, this actually did have a major overhaul where I updated some of the formatting conventions. We've got the light yellow with the blue text. I added a very smart feature for the sensitivity or for the seasonality logic, which didn't exist in the first version of this. So you can actually define for your expected annual car counts, you can define what percentage of the total annual car count hits in each year. And then there's a lot of smart logic here that tells you what percentage of the maximum capacity you're actually using based on the defined logic in this section. And obviously, if you're doing over 100%, that means you've entered an assumption that is not logical. We've also got some more assumptions for days open, hours open per day, number of locations. So this lets you do number of locations as more than one. And if you were modeling that, you would just enter the expected car counts across all locations over time. We'll change some of these. So we got to update. This has got to say debt schedule instead of financing. And then we got to add in our tabs. So we're going to add in, um, oh, we're integrating Capex. And to do these integrations really fast, you have to have all the tab names in here that are going to come from the other template that we're pulling all this three statement logic from. So Capex, cap, table, And then we'll do income statement dash M, income statement dash A. Man, this is so much nicer because now I can just put the income statement, balance sheet, and cash flow statement right here in the front, and it's only going to take up a little section rather than the entire bottom scroll roll part of the Excel sheet. Balance sheet, monthly, balance sheet. Because I'm trying to get really fast at doing these because I got to do about another 50 or 60 cash flow statement, monthly. All right, so we've got all of those in. We'll do updates on the coloring. Capex investors one terminal value. This investors one tab is not going to be used, but it's just got to be in there so there's not an error when I paste in everything. Investors one. What was the other name? Terminal value inventory. This will be used. Terminal value. Inventory. Inventory is not going to be used. And I think that is everything. Oh, validation. Oh, do I not have a validation tab in here? Well, we'll have to add one. So don't forget to check out smarthelping.com if you want to see over. Got about 120 templates on there, and it's not just for startup models. There's obviously a lot of startup models on there, but there's also some cash flow waterfalls, some tools to help track receivables and payables for an accounting department, inventory tracking and inventory forecasting, all kinds of things. CRM for customer pipeline tracking. There's some cool stuff in Google Sheets you can do with all that. Dang it, I can't tell. It's hard to tell on the screen what color is the light yellow I want. So we want that one. Well, this tab is used. Now, usually the control, we'll have to update that too. So we don't even have a global control on this, so we'll have to integrate that. Um, each model usually has a little bit different global control depending on what it's for. So the one on the base template, we will not be using. I'll use just the latest one I did on the last integration here. So this is the most important thing is C3 has to be the company name, and then C5 and 6 need to be the start month and end month or exit month. And then terminal value, this will always be an 8. But see, this logic is specific to this. But again, really, because this name is going to pull to all the financial statements, this start and end month are going to pull everywhere. So those need to be in the same spot. The rest can kind of be manually finessed when it's not that big of a deal. Okay. Well, let's get this thing in here and start building. So I've got all these already highlighted. So we'll copy the income statement, monthly and annual over. And then we're going to do a find replace and then we should have all our formulas ready to go. And then it's just a matter of checking all the references and doing some, there's going to be some customizations that are required. Oh, so I just want to talk about one reason why I do this is if you're looking to, if you're like coming out of college or looking to do financial modeling for a living, this will give you a good idea of what it's like to do startup models, which is um, a big portion of the work you would do in this line of or this industry. So this gives you a little insight on what that's like. And it's different for everybody. Everyone finds their own niche and little spot they like to do, what kind of work they like to do. All right, we're almost done here. We've got the cash flow statement in. Global control, we're actually going to pull from our latest integration we did because we want this format. We also added a bunch of checks, so this is cool. This checks all the different the P&L detail tabs, which are already in all these templates in the executive summary and distributions. It will check all of those final values against the income statement, balance sheet, cash flow statement, and also check some of the monthly versus annual totals and make sure it's your check to make sure everything's balanced because these always should be zero no matter what. There's no case where they should not be zero. And it's all in the global control tabs for easy use. Like you just okay, do I want to see if anything got broke? Go to the global control, check out that. You should all see zeros and all that. If not, you have to go figure out if you overwrote a formula or something, or who knows what could happen. Now, see, we'll have to update some of these texts too, because this is not going to be a run rate. It'll be a EBITDA multiple for the exit. If there is a terminal value that you want to include, again, this was a new feature I did on the latest one, including terminal value, yes or no, and that was super helpful in making the balance sheet much easier to reconcile with varying assumptions on the exit timing, the timing. All right, well, moment of truth. Let's see if we can do. I'll make all these a little bit gray. We're going to try and do the find and replace here. Hopefully it works on the first try. Oh, we also got to bring in, actually, before I do that, let me bring in the Capex section. This will not have to be modified. We only had to modify it for the equipment rental version because obviously the main business is fixed assets, so this had to be modified to fit that. Basically, we had to add 100 rows. So this will let you pick, I don't know, for a car wash, Um, you would probably enter the building if you're purchasing a building that cost here, value of exit, and then all these fixed assets could be equipment. Definitely, there's definitely equipment for car wash. You're gonna have like all the different things that go into um, the things to wash the car, and they'll have some depreciation. So there's slots for all that. Let's see. Do we have any other quick updates before I do the? I think this is good. Okay. So find and replace, what we're going to do is replace everything that says three statement model, monthly and annual. So this is our integration source. We want to get rid of that. So we'll copy it. We'll hit replace. We're going to replace that with nothing, with all blanks across the entire workbook. And hopefully it works. Replace all. Ah, dang it. So what did we have an error or right here? What was the error? Global control, income statement annual. So this means now why didn't that work? Uh, it worked for all of these. We got stuck up, it looks like right here. That looks fine. Capex. Oh wait, no, we got stuck up on the income tax row. Global control, income statement annual. Oh shoot, this needs a space. It looks like. Did I not put a space? Yep, my fault. That needs to be a space. Okay. Hopefully we can undo. Or wait, does it work now across the board? No, nope. Okay, so it stopped there, so that's fine. We'll just go right back in here now that we've updated it and try it again. There we go, 10,000 replacements. All set. Perfect. Well, now that we've got all of that in, we're in a good spot. Now let's take, we'll format. Man, this is a grind, I'll tell you right now. But I really believe that it's worth it to upgrade all these templates because I'm improving the quality immensely. And I think it's more important right now to do that rather than just do more templates of different things. I've got enough now that they need to be fully upgraded with the three statement model and cap table and just general formatting updates and have the most recent terminal value logic. Just it's needed, so we're doing it. So we got to put in a date logic here, which is just going to be based on this. Year, this, and then 1/1. We just want the first day of the first month of the year, start year. We'll go down from there. So that'll drive all the drop downs that we have in the model. And trust me, if you've never done it before, this definitely probably seems overwhelming, but when you've done it a lot of times, it gets, it's just, it's like muscle memory. But don't worry if it seems overwhelming at first. If you're trying to learn this stuff, it's hard. But I'm trying to give a good foundation for general use off the shelf financial models. Okay. So All right, our date's all updated. I'm now going to format the financial statements, and I just freeze the top left so you can scroll over and down and still see all the relevant information. Make the column list 15. For the financial statements, I do always have 2 decimals. It's more formal. And CPAs know this. It's frustrating when you don't have decimals. I know it looks worse, but it's more exact and it helps with balancing out things. All right, so this did have an update for the executive summary, which is in pretty good shape here. So that's good. That won't be too much of a difference. And it's got the proper distribution schedule. Um, so there's no need to pull that integration in. It's already got the full version here, which is fine. So that's kind of nice. We don't have to do anything here. Let's see, investors one. We don't need this tab. No inventory to worry about. Um, let's see. Now, technically, oh, cap table we need to bring in. Put this in here. And this is a really robust and general cap table, capitalization table. If you're raising money, you want to say who do you raise the money from and how much percentage of the common shares or preferred class A and B does each entity get. Also, you've got a section for insiders, founders, and then it gets down to fully diluted ownership value and then a distribution schedule. Make sure I got that in the right spot. Yep. Okay, perfect. And this is just a 5-year model, so we don't have to do any updates to the total timing. We'll do some find and replace stuff here later. All right, so Capex is good. Can update the timing or the drop downs though with our data validation list. And then here I'll probably add an index tab on this model. So it'll just list each tab and what's on it, what it does. This is an important one also. On all my models, there'll be drop downs with dates. You never want to pick one cell and just drag it down because you'll see it always needs to be the first day of whatever month you're choosing. So you need to select it in the drop down. If you just drag it down like this, you can see, look, it goes 6-1, 6-2, 6-3. That'll give you an error because it won't actually, the logic will, I think this is the following month when it goes into the template. What you can do is you can highlight two that are both 1-1, like 2022 in this case. If you highlight them both and drag it down, then you get the proper 1-1 all the way down. Or you can just manually select a month for each of them, and that works as well. Let's give these a little bit of a lighter border, line style. Top is always the building. Um, all right, so we've got all the logic we need. We've got all the tabs. I'm not touching any of the actual revenue logic and running costs, startup costs. All this is going to stay like it is. I'm just adding all of the reporting features and then the cap table, Capex, all those are nice features that go on top of the base template. So I'm not taking anything away and I'm just adding some more professionalism to the template. Now in this one we have startup costs. Like this, it looks like if you're going to build out something. Um, Now I'm not a CPA, so I don't know exactly the proper, if these should be, if the development costs go into a final value that gets, how exactly how this works with taxes. Um, but the cash flow, which is really the most important thing, is you're trying to figure out how much money you need to do all this, um, will flow properly. So these startup costs will flow into month one of the income statement. Uh, and then anything else that you're buying, like equipment stuff, you should put here on the capex. Or if nothing is relevant on the startup cost here, you can just zero all these out and just use the capex for all your initial purchases of things that are depreciable. Basically, if it's depreciable, put it on the capex. If it's not, if it's just a regular expense, put it on the startup costs section. So this is no longer relevant. Let me see. Start month of operations. That is relevant, so we'll have to add that slicer in there because it's possible your start year is, your start month of operations is during a month within the start year and not the first month. So we don't need this or this. And then we're going to bring this start month of operations in the global control tab. Let's see. We can put it here because none of this is relevant. Come on, clear all. So here, we'll define when your revenues and expenses start for operations. And we'll make sure that still is linked up to the main model. So C, let's also delete this. We'll move this over. Actually, we can just clear this out and then update the other links. So let's say our start month is in March. Let's make sure that carries over to our monthly P&L. It might not. Yeah, we might have a. Let's look at the debt schedule. Update this drop down as well. I was trying to figure out why there. So this, yeah, this no longer needs to reference that. It can just update on the validation. Okay, there we go. Perfect. Okay, so yep, all the revenues, expenses are updating on that start month date. That's good because we don't want to break the monthly P&L detail. That's going to drive essentially everything. Let's try a different month just to make sure. Let's say you start in May 2022 with operations. Looking good. Looking good. And make sure we can have a variable on the debt service if there is any. Let's say that's also in May. And we want to make sure, yep, we do payments per year variability. We update the formatting on this date real quick. A lot of financial modeling has a lot of formatting, but also a lot of logic. It's intense on both of those points. All right, what else do we need to do to get this thing ready to go? So this was fine, nothing broke. That seems to be working fine. This will have to be updated later. Updated later. And updated later. All of this will have to be updated as well. Okay. So I think we've got everything we want from this right now, so we can minimize that, and we're done with the three statement model. We can get rid of that. All right, so we're just in our new template, the car wash model. Total debt funding from banks. So this we want to move over to global control. And you don't have to have funding. You can always zero this out. Make sure that carried over. Yep, perfect. What else? Let's go back to the startup cost tab. this is this is yeah, this is relevant because the distribution schedule is referencing that, I'm assuming. Yep. Okay. So move that over. We don't want to break the reference, so we'll just go cut and paste. Then that's going to go right into here. Oh, or we got a reference error. Well, this would be total equity minus what's coming from investors. Total debt. Okay. So we got that in here. Make sure. Hold on a sec. Startup cost C25, C29. Investment funding. Okay. So this one goes where our investor proceeds go. But this is actually going to be a reference to the cap table that we don't know yet. And then remaining owed. We'll go here. And we don't know what that's going to be yet. Okay, yeah, this is the distribution contribution schedule is the last thing that we update first. We got to get all the other stuff updated. So that's fine. I'm just kind of putting it here so I don't have to think too much when we do it. All right, I think we're ready. Let's go back to the monthly and make sure this looks good and nothing was broke. I don't know why we lost if error. We can drag that over though. That's fine. Okay. Okay, we're good. So let's go to the income statement. There is one type of revenue. Well, we've got 6 car wash types, but we're going to just roll that all into one revenue item here for the income statement. Keep it clean. So this will be car wash revenue. We don't need these others in here. Clear content, don't fill, and then these will be black and clear. We will update some of the rows and all that at the very end of the update. Here we just make sure we got the same month referenced and drag it over. Man, I'm so glad I updated the date stuff on the base integration template where we don't try to make the model be completely blank after the end month. That logic was not good for integrations. It's nice now. All right, we got revenue. That all looks fine. Let's see. What do we do? Do we do variable costs here? Yeah. So these variable costs will change as the car counts and everything change. So we're going to do, we'll call that on the income statement, not cost of goods sold, but variable costs. And then this will be total variable costs, and this will be contribution margin. Now here we can just go cost, what do we want to call this? Electricity, gas, water, detergent, claims, repairs. We'll just call it variable items total. And if you want detail, you can always go to the monthly detail to see exactly what that is. But that'll be this subtotal. Income statement is always the easiest to do, and always the hardest is a balance sheet. Like, no matter what, I've done a lot of this work. And then making sure everything matches up, obviously. So there's contribution margin. Now, operating expenses, we don't have a ton, so I think I'll just list them all. Yeah, we only did 14 slots, so we can put them all in there. So what we do, just reference our monthly, and these are referencing the base. Yeah, good. And then we will also put in startup costs here. Not Capex, but startup costs. So these would be things that are tax deductible, not and are not related to depreciation. And on this, I'm actually going to put, so it's less confusing, item 1, item 2, etc. They'll be different for everybody. And here's also where you would put a reserve if you want to say, well, so the model solves for the minimum equity needed. If you want a reserve, then you would put that whatever amount you want for reserve in here. What that means is when you see the cash balance at 0, you actually got whatever you put in the reserve. That's the amount that would be remaining in the cash. We'll put reserve on the last item. This is all not needed anymore. See, on this model, the global control was the startup cost tab. So now it's just the startup cost is only the startup cost, not all this other stuff. Okay. Cost, we simply just make a one-to-one reference right here. I'm thinking for an upgrade to this model in general. Oh no, we do have it. Never mind. I was gonna say we should have it be able to change over time, but it does, so that's good. If you want, you could define different costs for each year. Um, what's this referencing? 5-year annual. Ah, so for the start year, we can just actually, again, go right into here. Perfect. Okay. Okay, good. We could bring this down to and this not specific. Initially, it was for a car wash tunnel, but really, there's no difference in the logic here. and doing car wash bays, it'd be the same logic. All right, income statement. So we're down to Ebitda. That looks good. Interest coming right off the debt schedule. Depreciation is fine. We might have to do some updates to the formula, but for now it's fine. Yep, this is all good. All right, let's go to annual. And we'll do our first check, which is going to be the sum of the net income here. Should always be equal to 0 if you subtract the net income on the monthly. Whoop, didn't mean to do that. Minus sum. Perfect, so they're all in sync. That's good. Oh my goodness, it's only 10:47. We've actually, I mean, if I could do an entire integration, there's no way, but maybe in one stream that would be really good. I don't think it's possible. There's just too much that can go wrong. All right, we're not doing inventory in this one. There will be future ones where we have inventory logic that we'll have to do, and that makes some more complicated things on the balance sheet, as well as accounts receivable and payable. But for this, no need. It's just, people come in, give their money, and it's pretty straightforward as far as that goes. So balance sheet, I always go here and look at this and say, oh wait, yeah, I got to do the cash flow statement first. So cash flow statement, we don't need this one. This is just going to equal the net income, or not the net income, the gross revenues or total revenues from customers. Then we have other OPEX. Oh, let's check real quick. Do we have logic on the monthly to stop this at the exit month? No. Okay, we'll have to add that in. So right now, I think this assumed it ran through to the end of the 5 years, but we'll do dynamic exit and end months. So we'll have to update that later. Okay, so for now, income statement manual, other operating expenses. Now this does have it, checking for C6, which is the end month, I believe. C6, yeah. So that's good, that's in there. And then we're doing income statement D63, 15, and 16. So 63 is this, and then these two, which really it should be 18, but there's only one line, so that's fine. Interest, that looks going down over time, that looks right, and then taxes, fine. So on these three statement models, it's always a puzzle, and you're always like updating one part of it and moving to the next and into the next, and then that leads to something else that you can then check because they're all interconnected. So that's what all this logic does, is connects everything and per the correct accounting math that needs to be happening. Capex looks fine. Sale of the business. So here's our first hurdle. Um, let's go to the term. So first we have to define how we're going to actually do this, which I'm going to say this is not a run rate multiple. This is going to be an EBITDA multiple. For businesses like these, usually the most common valuation method is some multiple of EBITDA, which is earnings before interest, tax, depreciation, amortization, and that's trying to get down to the actual cash generated uh, multiplier of annualized EBITDA on the exit end month. Total proceeds from selling the business. Which is going straight to terminal value. And that's what we're going to update next after this. Oop. Okay, so all we're going to do, so I thought I had that. Let's go back to our last template real quick. And pull the terminal value logic. Notice how, I find so much use in my templates I've already built. It's just being able to copy and paste stuff in like this, so I don't have to think about anything I might be missing is really nice. So it's cool to find value in my own templates to help with all this logic. All right, all we gotta do is update. So let's clear this. Reference to the other workbook with a blank. Replace all. Oh wait, did I get it all in there? Yeah. Nope, I didn't. Dang it. What's down here? Website. I should be able to just copy this. Put that in here and then replace all. Where's the error? Um, so this doesn't make sense to me. Global control is a tab that I have here. GLOBALC. Well, whatever. We can just manually do it, I guess. No big deal. Oh, actually, this is not even. This logic's different because this is a run rate. So we're going to have to finesse this into our own logic for this version. So this is annualized end month EBITDA, and we'll calculate that by simply going index. Let's find our income statement, EBITDA, and then just match that with this end month. times 12. Oh, why is that not pulling? Index 66. If the end month matches the month here. Now what's the problem? Oh, end month is greater than, okay, hold on. We gotta also update this. This is a, there's just so much when you're doing an integration that you gotta update. So it's just, that's why I just go one thing at a time. And that leads me to all the different things I gotta do. So this should be a validation reference. And then obviously 2027 past the last month. Let's put it 2025. Okay, so there's the Ebitda, annualized Ebitda, then our multiple, the exit value. And if we put no here, that should just zero out. Should be, where's that? I swear that was in here. Oh, it was at the bottom. Okay, so we want to put it here too. So, um, if this, no, don't freeze, don't freeze. No. Oh, good. Okay, we're back. Phew, I better save real quick. I'm gonna get rid of the, actually, I'm gonna keep this in here. I might need to reference that again. All right. If global control exit equals no, then zero. Otherwise, take this value. Perfect. So that's all zeroed out if we're not doing an exit. And if we are, then all the values come in perfect. All right, back to the cash flow statement. So this capital expenditure looks fine. Sale of the business. Yep, that's fine. And I'll just, oh, December 2025. I thought I did the last month of the 2, 3, 4, 5, 6. Oh, okay. Dang it. So I only did, I did 22, 3, 4, 5. I only did 4, yeah, so this should be down to row 60. Okay, let's update all our references. Oh man, that's frustrating. So all these have to be updated. It happens. So this should be down to 60. Make sure, yep, 2026. Actually want to stagger these so I can make sure that it's picking up that possibility for a variable exit or variable purchase month. All right, so that's updated. This is fine. Truly, you're probably not going to put a financing in the last year, but you never know. Revenue assumptions. We don't need any of this. Yeah, We just replaced all of this logic. Also, I don't think it was the best place to have that on the revenue assumptions. And this is another reason why it's good to have the global control tab to control that big stuff. All right, this is the one we actually realized this needs to go to 60. All right, I think we got all the drop downs updated now. Where was I? Cash flow, exit, sale of business. So why is this not? This should be coming through. This is yes. Let's go to the income statement. Ebitda is 0. Okay, why is that? What is 0 across the board? What happened to the monthly? Index revenue assumptions. Oh, okay. So here's this did allow for some variability, it looks like, in the exit month. So what I did is all of these revenues and costs are based on car counts that exist. And I didn't have to put the logic in each of these because it's just could run off of this. So that makes sense why I did that. Now we got to update it. So if E5 is greater than this needs to be the exit or end month of the model. C6, then 0. Otherwise, if E5 is less than global C12, right? Start month of operations. So that's a reason why I copied and pasted that to keep the reference. So start month of operations is still good. So if it's less than the start month, then don't start, obviously. And that's it. Okay, so we should be good to go. I'll drag this over, see if the numbers pop in. Yep, perfect. Perfect, perfect. Now, why are our fixed expenses? This also needs updated to end month. Okay. Now I believe this works fine just dragging it down and over. No, never mind. Hold on. If E5 is greater than control G6, C6, 0, otherwise. Alright, what's the problem here? Okay, that was fine. Fine. Nope. Okay, there's our error. Let me see exactly which one it was. So fix cost to not sure why. Oh, I know, I think. Did I not lock? Yeah, gotta lock this. This gotta be locked. Perfect. All right, now we're back to having an Ebitda terminal value. Let's go back to the cash flow statement where we were. Something's weird here. I'll have to fix the reference probably because that's too big. No, that's not too big. 1,122,000. This is too big though. Tax. Oh, taxes are always because the tax rates are in a lower sell position. So we're at 30 and 31. I could fix this real quick right here. This is doing 9 and 10. It needs to be 30 and 31. Man, it's really nice to not have to think about this tax calculation. All this logic is already here because it's frustrating as well as the fixed asset stuff. Okay, now back to the cash flow. That looks more normal. We'll see though when we check this against our P&L details to make sure it's all proper. All right, we have a number now for cash flow. That's good. Go to cash flow annual. This should be the same. So sum of this minus sum of this. Perfect. Good, good. What else do we need to do? Let's see, this is not relevant. Balance sheet. So we now have a good cash row. Non-current assets and depreciation. Now I know this did need an update. Let's go into the last one we did it on. How did I do this? Okay, perfect. I'm gonna take this exact piece of logic. I remember doing this on the last stream and it was annoying to figure out, but now it's figured out. And put that into here. Hold on, is that how do we go from 9.8 to 963? FAQ. Oh shoot, I must have been on a further month. Yes, I'm in frickin' year 4. Let me pull the year month 1. And position matters. Position always matters here. What? C32 on the income statement. It says C47. Oh, shoot. Okay, I know what happened. So I haven't removed rows yet on this one, but I did on this one to clean it up. So actually, 32 to 47 on the income statement is just its whole depreciation. Okay. So we just need to update this sum here to be our depreciation. And then we just lock the one side so it's a cumulative number. And there we have it. Same with the total non-current assets. Man, this is nice to have this just right here. Copy and paste. So get rid of that. And now we have a new formula. Alrighty, so we're down to, so that's fine. These are good. Long-term debt, let me check on this one. Yep, that looks fine. Oh, wait. So in month two, let's see what we have here in month two. Oh yeah, it's the same. Okay, so that looks good. All of this here, we're just going to reference cap table, outside investors, and insiders. And this can just be equal to total they contributed. And their total. Now let me widen this out real quick. Now for this, I better save as well. For this, we want to count this all the way across, I believe. Let me see how I did this. Yeah, unless we're done. So it's really nice to have the same formatting and spacing across all these. It makes the integration easier. This is a huge undertaking doing all this. It really is. All right, so that's good. Retained earnings. Let's go right back into here. This is an easy one. It just equals the income, net income. And then this one just equals income statement 97. And then we drag this all the way over. Now the question is, I want to make sure I have these right. Okay, those are good. I didn't copy these in. Okay, that's good. And I did this manually. Okay. And we'll get all our checks will come through at the very end. If there's any reference errors, we'll know it. Because we won't balance as I start changing stuff around. All right, so we're way off on the balance sheet. I'm not surprised. This one was. This is not right. Let's see. Terminal value D3. Which, okay, that's good. Then we're taking the net income and income statement 57. What happened here? Oh, it's in a different row, I bet. Yeah, 97. 97. Because remember, the balance sheet's basically an accumulation of all accounts of everything. Okay, this looks good. We're out by the equity amount 592. We're out by a whole bunch of stuff. Assets are negative. Cash. Oh, cash flow monthly. We didn't put so sale company stock. Oh, it's D72. So this number, since we're assuming everything happens in month one for fundraising and everything else, this number will always equal our cap table total equity required. And now we have to update that or else we're going to have some circular reference errors. So cap table, this clear this. Equals global control C23. Really, it's actually, it should be C16. And then C16, and this is where things is so crazy. It's just such like a puzzle. C16 is based on the min monthly P&L, but the monthly P&L does not include some of these new things we've added in here. Like taxes, it's got debt service. Let's just put numbers in here so we make sure it's working. Wait, we do have numbers in here, so why isn't that coming in? 100, 100. Ah, got to re-reference to our new exit month. Let's just copy that. If our month is greater than the exit, then zero it out. Because all this is going to flow into the min equity needed, and then that will flow into the equity required, which then flows all into the income statement and in the financial statements, and it's all smooth. But if you don't do it right, you'll have circular reference errors, and it's annoying. So this has got debt funding, debt repayment. Now debt repayment we won't need because on the debt schedule we're actually going to put it'll be in the principal repayments if there is so if there is an exit, if our definition here of terminal value equals selected as yes, then we want on the exit month or end month to pay back the loan, any loan due. Otherwise, just do NA, and that means there's no payback month, and the schedule should just run to the end of the template. And then on here, this is a real nice one. Let's see, where's my debt schedule? We simply do if the date matches the exit month, then you're taking the previous principal balance plus the interest accrued for the period, and that's going to be your total payment. Otherwise, do your regular logic. So now if I drag this down, everything should be the same except for on that last month, we have a big payment. So that's nice, and that should come right into now right into here. You scroll over, and there it is. Oh wait, there it is. The big payment on the last month. No balance left. Now we have other items. So startup cash required is okay, good. We have that. Sale, this just we don't need any of that complication. All we have to do is say if this equals our terminal value end month, then just pull the value, the sale value, otherwise zero. And then I did all logic on here where this zeroes out if terminal value is marked as no, so we don't need to do extra referencing on this one as well. We just simply reference that number on the terminal value if it's the end month. And it'll be zero or some number. Now we also have, actually we're going to have to pull the amount assigned to extraordinary income because we split this between fixed asset. Oh wait, no, hold on. Let's think about this. Let me look real quick. What did I do on this one? So sale to business, I just pulled the cash flow. So let's copy these over. I see what I did. And that way, that would work fine. So sale of business, sale of fixed assets are separate. So that means this equals cash flow. And remember, nothing's a reference error unless it's a reference in itself. So this is why we can do this, because um, nothing's a reference in itself in this case. The cash flow, the sale of business on the cash flow is referencing things other than, um, has nothing to do with the cash required. So that's why we can still do what we're doing without any problem. So we also want fixed assets. That's another cash flow one. It's so nice to have that cash flow or these statements all condensed into better or shorter names. And so sale depreciable assets will include, whoop, the building as well as the fixed assets. We don't need decimals on this part because it's just a detail, it's less formal. And let's also add this. We're also going to have to put in taxes and Capex, I believe, because this had no Capex before. Yeah, it's just the startup costs. So all I'm going to do, move this down 2. Before I forget, we'll also do it on the annual. This is going to move down 2. And we'll have taxes in here, Capex. And we'll know if we missed anything because this will not balance our balance sheet number if it's not right. And see, so on my detail, I kind of just would do cash flow items. On the income or on the actual cash flow statement, it's broken into operating activities, investing activities, and financing activities, which is general for accounting. Like those are the defined categories you put in your cash flows line items. And it's standardized so people know what that means, and that's why it's used like that. All right, so this is a negative. I think these are both negative. So you can just add them up. All right, we're cooking here. Cash flow before equity. We don't need, wait, so this is fine, I can stay here. So this is what we need. This minimum cash position is what's going to define what we need. I'm just going to make this a different number. Let's say it's 0.5. Oh, and then they sell for 2. So now we go over here to our global control. Equity required. So this, let's see, is this taking the right row still? Monthly, it's the minimum monthly cash position, 74. Yep, that's the right number. And we could check it with this. This will be equal to, yep, and we go to 0, perfect. That's how we know this part is right at least. What else am I missing here? Anything? Let's see. So looks good. Break even month is 60. Now, what does our OPEX look like? Oh, it's pretty small. And again, these numbers I have in here are completely arbitrary. Completely arbitrary. So you'll go in when you use any of my templates, you're gonna put in um, all your own numbers for all these assumptions for revenues and everything else. Let's say this was a bit higher. Let's say 30,000. See now 30 or see that gave me an error because it's actually not possible to have that much capacity for those 2 months based on how many cars at the time it takes to do a car on average. Now if I were to put this down to 2, and look, you can do, so let's say this is 2 minutes, this is 2.1, 2.3, because the higher end ones usually take longer. So really, I really liked the logic that I added here when we did the last update. This was really, really nice to plan out. Because it's always nice when you actually have some data, some information around what your assumptions actually mean. And for this model particularly, it was really a good logic to build for the car wash model with the sensitivity and everything. Okay, let's go back over here. Yeah, you're making a bit more. Break even month is still 60, but it's better than what it was. And again, these are just arbitrary. Like if I were to try to get more close, the cost of this, let's say you're building out, I don't think the equipment and all that cost 180,000. It might if you're doing a bunch of buildings, but if you're doing a bunch of buildings, then your car counts would be higher. Also, let me think about this. If we raise the car counts, how does that scale exactly? Ah, you would put number of locations as higher. So if I did this as 2, watch how our utilization should drop in half. Yeah, so now it's 28%. Or if I did 3, it's even lower. So if I had more locations, I could do more car counts without going over capacity. So now I could do, like, if I wanted to, 100,000 cars across 3 locations per year. So each location is doing, 33,000 roughly. And here we're still only at 60% utilization at the highest. And you can define the percentage of the cars, like I said at the beginning, that fall into each month. This logic is so cool. If you're doing a startup car wash model, this is very, very helpful in figuring out, um, trying to estimate your car counts and what you might be able to do and how many locations you're having, and then that flows all the revenues and etc. Now, I bet this started our break-even month up a bit. Guarantee it. Yeah. Now it's way back here in month 21 we break even based on those assumptions. Now again, if you're doing more locations, you're probably spending more on the building, but maybe 1.5 is enough to build 3 locations and all these costs here. Oh, wow, this is such a great model. The more I go through it and like think through actually how it would be used, it's really, really good. This is a good one. It's only $45 too. I only charge a one-time fee on these. Just the value is immense. All right, where was I? Okay, I was trying to do the min equity requirement. I need to add the annual portion. So row 69. These three, and then I should be able to just drag this down. And then add them. So we want to do add this, add all this. Now taxes you can always zero out if you know, I know a lot of people have all kinds of different specific tax situations. So if taxes aren't relevant, um, you can always zero that out. Or if you don't want to do a terminal value, that'll help normalize the taxes. You can always hit no here and just see the operational activity. Go back over to the detail. Yeah. Now, why is this? This should not be higher in the last month, I don't believe. Let's look at our taxes in the last month real quick. I'm just curious what happened there. Ah, so net gain or loss. Do we need to update this? Go over here real quick. We might need to update that formula. No, same thing. We probably need to update the Capex formula, I'm guessing. Yep, this one here. We got to update I and J. Because if you hit no there, then there should be no fixed assets, and that's why there's an extra tax in that last month because we didn't. So here, this should be able to just be copy and pasted over. And this will zero out now. And then I think I can drag this down. Let's make sure though, if I hit no, does it revert back to what it just was? Or I mean, if I hit yes, oh, nope, we got an issue. Undo, undo. I should be able to keep that there. Let's make sure the top one at least worked. Okay, good. Let's go back. All right, I'll pull the second row from here. We are really far. Like it looks like this model is going to be done tomorrow, and I could probably do some more or start on a new one, which is really like, as you know, if you've been watching, these integrations usually take three or four, maybe not five streams, but three or four. And now, I mean, it's day one, hour and 40 minutes. I'm almost done. This is really good. All right, we just got to figure this out. So why would this be a circular reference error? Shouldn't be. Let's try it one more time. Okay, now it works. So it must have been, this formula must be a little bit different. Yeah, it actually is. This does not lock 5, and this does, and 5 has to be locked. All right. Let's also do the net gain or loss real quick. And I always know it's new if it's saying global control CA equals no. That's my indicator that this needs to have that in there. All right, now let's try it again. If I hit no here, that worked. Good, all zeroed out. And now if I go to my taxes, yep, taxes are all the same for that year. That makes sense. Go back to the monthly. Perfect. So we're all jiving there. Now this number, why is our $2 million still coming through? How's that even possible? Because even though this says 2 million, okay, I know what. I know. Sale of depreciable assets, another one. I guarantee you, and the new one we updated it to check if it was terminal values included or not. I guarantee it. Sale of yep, there it is right there. Man, I hope when we get to the end of this model, um, if I can do all the checks and we have no errors, that would be, and it took this short of time, that would be amazing. Very good. Yep, so that should be zeroed out. Okay, now we go over here. Yep, all makes sense. So this is good. We have our min equity. Now, if we go to the balance sheet monthly, nice, we zeroed out here. That's a very good sign as well. I mean, we might be just about there. Are we balanced? Oh, we're out by the, it looks like the debt funding, and that's it. Oh, that's a very good sign. Okay, so this is liability. Ah, I see. So this is a issue. Okay, so if I go back here, if I put the debt to start in a month, that's not the first month. Do we see an issue as well here? It's such an obscure thing usually. Yep, okay. So that has got to be updated on all. Luckily, I've only done 3 or 4 of these templates, so I'll update that logic. And what it is this long-term liability logic should be updated so that if the date is less than the start month of debt, just zero it out. So really simple update there. I'll update it on all the other templates after this. But for here, so we want to say only do this if this is less than that schedule here, then 0, otherwise pull it back. I mean, usually, 99 out of 100 times the debt, if there is any, is going to be on the first month, but it might not be, so we should have that update. There we go. And what this is doing is just taking the total initial balance minus any principal payments. So it will automatically go to 0 on the exit month when the big principal payment hits. And there we are. We're balanced out on this. That's good. Put this back to January. We're getting there. We'll do some more. So tomorrow we'll do some more of this because we got, let's see, we got to update references on this. Executive summary might need to be updated. Yes, it will be actually because we added more items for this, so we got to update that. Distributions, we'll have to run all our checks to make sure it's working. But I mean, this is pretty good. We got through essentially all of the financial statements. We've got all of the schedules updated. We just need to reference some cap table things here. We found out a logical thing with the debt service that we can update on all the other templates that we've done with this. Didn't break any of the revenue or expense logic. That's great. So yeah, I mean, this went real fast. I mean, I'll finish it tomorrow for sure, and we'll probably start on the next one. I think it's a product as a service. That's going to be a fun one. I guess we'll say that because there's going to be some more complexity in that than these other normal SaaS and equipment rental stuff that we've been doing. Oh, I wanted to check visuals. Okay, so this is cool. On the visuals, I just did essentially the capacity usage versus availability, which shows you the max you could do in a given month, and it shows you where you're getting to based on usage. Now here, expected versus average minutes per car wash, average expected minutes. So here we're let's see, are we under or over? It looks like we're over. Let's go into real quick. So it looks like year 3 or 4. Let's go to year 2. So this is simulating year 2, and obviously it's you have different numbers here as you increase the car count from whatever you have it here based on these assumptions. So you want to check all 3 years. So 2 looks good. 3 looks good. Yep. So year 4, too high. So we'd probably have to say maybe 15% growth. 10, still too high, maybe 5. And then try year 5. A little bit too high. Or maybe there's a 4th location. Then you'd be fine. I'm going to put this back to 1 though. Put this back to 15,000. Whoop. And put this back to 1. So you know if year 5 is good, that means year 4, 1 through 4 is going to be good because they're all lower than year 5 based on these assumptions right in this section. Okay. So that's good. Yeah, and if we go back to those visuals, you'll see we also got a nice kind of return summary. I'm going to keep this. This looks pretty clean. Debt service coverage, profit margin, car counts by type. Yeah, we'll keep all this. This is good. There we go. So now you can see your average operating minutes available versus what you're actually using. And then here it's showing your expected minutes versus, let's see, what is this pulling? Actually, I'm kind of confused. Actual expected minutes per car. I guess that's max capacity versus what's used. Let's go to this one. Oh, the average minutes per car wash versus expected. Now, how do we, I'm actually curious. Let's go to that calculation. So 83, 84. Let's look at that real quick. So this is taking average cars per day per location divided by revenue assumption D29. What's D29? Hours per day available, open. Okay, so it's taking average cars per day per location divided by hours per day to get average cars per hour. And then we're taking that, 60 divided by that number. So this is, okay, so this is the actual amount of minutes a car can take versus how much. So if you're at exactly 100% capacity, then those numbers should be the same, which you'll never be, or it's not likely. If you're if this average minutes per car wash number was following this exactly, which it can't, but if it was closer, that's showing you how much capacity you're giving up, basically. Because it's saying you could actually take this many minutes per car, but their cars are taking this much. It's just a function of available minutes versus use minutes. And I thought this was a pretty cool visual to have. So like your car, you're saying, these should only take 2 or 3 minutes, and then these spikes are based on how many minutes are available based on the actual cars that are coming through. And so if you time these in a way where you were at 100% capacity across the board, let me try to, I don't know if it's possible. Let me see here. So first this has to go up. I'm just going to try to do year one. So you'd have to put this up, and then you'd have to try to get all these to equal 100%. So again, that's a really cool thing to do. So these, now you're over here, so you can you have to lower this. Let's go to the assumption or visual. I'm really curious. Yes, yeah, so now you're getting closer. You still have a couple months where you have a lot of um, excess, but that's probably because those are lower operating months because it's seasonal. Okay, this is awesome. This is awesome. Let me undo. Let me set this back to what it was. Oh, okay. All right, so we'll stop there for today. I'm gonna clean up. Tomorrow we're gonna clean up a lot of this, a lot of these things. Check all the balances. I'm also gonna update the other templates with that little debt funding logic, and we'll keep going. If you want to help support, check out smarthelping.com. I've got hundreds of templates, um, all different industries. If you look, smarthelping.com, go to the financial models tab at the top. You can see all the different categories I have here. Joint venture waterfalls, SaaS models, industry specific, startup models, accounting tools, real estate, just helpful general organization and tracking tools. A lot of stuff in Google Sheets here that's cool. A sales pipeline, KPIs, general business models, human resource tools, valuation, personal finance, and remember you can buy in bulk by category, all the categories I just went over, or by volume of the model types, which I label, after each one it says, intermediate, mid-level, upper tier. And you can see you can buy quantities of those types, or you can buy all the templates on the whole site for $849, and I'll give you everything I've got. All right, that's it for today. See you guys tomorrow.